All right, so this isn't going to be our traditional price action update videos I usually do or occasionally do. This is going to be probably a private video because this is just in response to some questions as far as a trade that I took today. So I kind of offered to make a video to explain it, so I'm going to go ahead and do that. So in order to explain all this correctly, I'm going to have to zoom out and kind of show you what everything is on the chart. So basically, all these shaded blue boxes, these are what's known as an FVG, fair value gaps. And you want to know what kind of a fair value gap is it? Is it a sell side imbalance or is it a buy side imbalance? So I keep track of it by basically right here, I have it labeled SIBI. That's a sell side imbalance, buy side inefficiency. If you see BISI, that means it's a buy side imbalance, sell side inefficiency. And the reason I want to know these kinds of things is because, like right here, this is a SIBI. See how we have the fair value gap right here? It's a selling fair value gap, so it's a sell side. And then over here, so I have it marked out, so that's your blue shaded box. And you can see over here, price comes back up, meets a little bit of resistance, and then it gets through it. So now this has been balanced. And believe it or not, these things stay valid for a long period of time. Like it's not a once and done thing. As you can see here, price continues to get into this and it kind of gets tangled up like a web. So these tend to act as support and resistance zones. And don't take my word for it. You can go back in your charts and you can look and you'll see for yourself how many times these act as support and resistance zones. So that is what these shaded blue boxes are. And then these pink boxes that I have, what this is doing is basically measuring the session from the day. So each one of these candles is 1 hour. So I got 23 candles in here. And what they're doing is showing me basically where the liquidity is. And this might be new information to you, I don't know. But this is really what changed the game for me with trading personally. This is what changed the game for me, is when I started to understand how the market runs. The lifeblood of the market is liquidity. So what this is doing here, we'll start right here. All right, price comes down. See where the top is right there? Price comes down. And what does it do? It goes well below all these areas over here. See this long wick right here? It came all the way down and then reversed. And what did it do? It took liquidity. All over here. There's all kinds of liquidity over here. Everybody had their stop losses. They all got taken. So that's what it did. It came down, grabbed liquidity. Now, very first thing I'm thinking to myself after I see something like this is where's price likely to run next? Well, if it just took all the liquidity from down here, where would the next level be? Up here. This is where your liquidity is next. So it's going to go up here for this, what's called, I believe they call this buy side liquidity. So people that were buying down here, this is where they're getting the liquidity. If you're selling, then down here is your sell side liquidity. But anyway, I don't want to confuse you guys. So anyway, this is where liquidity is. So price came down here. Now I'm going to ask myself, all right, who's been making money? So obviously the sellers have been making money on this whole move, right? So where's price likely to go next? Well, since the sellers have been making money, now to make it fair and balanced, it's going to start heading up for this area up here. So now it's going to start heading for the sell side imbalance. So it runs up, and what does it do? Look at this. Bam. Just above this. It took all that liquidity out. This is pretty much what really changed my trading because I wasn't trying to catch every little move anymore. I wasn't trying to figure out which way is price going. What's happening here? What about this candle? Oh, this is a this is a big bearish engulfing candle. Its price is going to go down, and then it doesn't go down, it goes up. You're going to drive yourself absolutely crazy trading like that. Trust me, I've done it, I know. So once you realize that your job is not to catch every little move, but to start to determine which way price is likely to go, that's when your trading is going to improve. And don't try to take trades in the middle here. Try to take trades down here. Once you've seen it take liquidity and you start to see signs of a reversal, that's when you want to enter the trade and you want to try to ride that up to the next area, which would be up here, which is where the next level of liquidity is. So these shaded boxes, the pink boxes, are just showing, or actually making it easier to see where the liquidity levels probably are, because you can see in this daily session, then this one comes down and look at it, just took the liquidity down here. Like there it was. It's right in front of you. And then price comes back up, and where does it stop? Where did price just stop? Right here. I mean, to the penny too. Where did it stop? It stopped right here in the sell side imbalance. And if I grab a square here and mark this out, draw this out. Now let's change that color to blue so it fits. So look at this. Price came up, touched that right to the exact point, right in the middle, to the penny, and then started to reverse back down. That is what? Support and resistance, right? Why did you think support and resistance is here? And yeah, it can be, absolutely. But in reality, what I have found is this is not just support and resistance. These are liquidity levels. These are spots where you would expect price to wick past, grab liquidity, and then move to the next level. And that's why traders get so frustrated, because they're putting their stop losses right where it's predictable. So the idea is not to try to catch something like this and have your stop loss up here. You want to be down here when price started to go up. Once it's already bounced, once it's already taken liquidity, and you see now it's heading to the next level because you've determined these were making money, all the shorts. Now it's time for the longs to make money, right? So your stop's going to be down here. And then price starts moving up, and then you can start doing your trailing stop loss if you want to. But that is pretty much how I trade. I hope that was easy to understand. Now here's where, you know, it didn't just come down here and then I decided to take this trade. So, getting back to today's trade. So what actually happened was the FOMC took place. Price came down. It went into the sell side imbalance. The wick continued through it. It went down here into what this is right here. I'm going to show you. This is a weekly, and I do like a top-down analysis. Where are you? My goodness. There we go. This was the weekly buy-side imbalance. Price came down, tapped the top of this, and stopped nearly to the penny, and then moved back up. Okay? Now, how do I get those kinds of levels? Is simply by flipping through different time frames. So, like when I'm in the daily here, we got this really large candle, so I have that marked out. So that is a buy side imbalance. Same thing with weeklies. So I want to denote all of these so that I know what levels are there. So it's easy for me to spot and where price is likely to bounce off of. And these are all what you would call a point of interest. This is an area that I'm already looking at. When I see price coming down, I'm looking at this level and I'm anticipating price to stop here and then continue on. Now that in itself is not going to convince me to take the trade. This is what ends up getting me into the trade. So once I have that point of interest, I know that once price gets down here, I'm interested. Now, what is the deal that's going to tell me, all right, go ahead and let's take this trade? Well, I'm looking for the what do they call this thing now? Having a mental crisis. I can't remember what we call this thing. It's a divergence. Okay, so it's a basically it's two assets that complement each other. They pretty much always run in tandem. And with Bitcoin, Ethereum is the one you really want to be watching. So what happened here? So I'm on a 5 minute chart because it's a little easier to spot. 5 minute, 1 minute, whatever. You want to be on a lower time frame to be able to spot these things. But this is what you would call a smart money reversal. So basically, what's happening here is right here and over here. So looking at this chart, this is the wick coming down, touches this spot. Right here on that chart is exactly where we are. So it comes down, touches that spot, and then goes back up. So what happened here? So Bitcoin came down, stopped. Ethereum came down, continued right on through. So Ethereum put in a lower low where Bitcoin did not. Bitcoin didn't put in a lower low until the next candle. So while this was putting in a lower low, Ethereum was starting to move up. So we have our divergence right there. So seeing that to me is a confirmation that now is a good time to take a long. I have lots of reasons why. I got these support and resistance zones, which I've already explained to you why I consider them support and resistance zones because they're imbalances and they tend to act as support and resistance. And then having the smart money reversal right here also tells me that this is likely to continue to the upside now because this is where probably, and I'm not going to say for sure, but probably where most of your smart money is starting to buy, which might be why they call it a smart money reversal. All right. Anyway, I think that pretty much explains it, I hope. If you have any questions, just hit me up. I'll try to answer the best I can. But that is pretty much how I trade. I have pretty much came to the conclusion that for me, I trade with no indicators. I like to just trade pure price action. And I look for where liquidity hunts would be. So rather than be preyed on and have them coming after your liquidity all the time or making you liquidity, why don't you maybe trade on the same side and look for where and anticipate where the liquidity is going to be? So just remember, like I said, always ask yourself, who's been making all the money? So right here, it was all the shorts. And then once that reversal happens and you see that there was a liquidity grab, and you can determine that there was a smart money reversal and you see price starting to head the other way, the first thing I would be doing is I would be looking at this level right here. This is where I would anticipate price to start going. And look what it does. It took 3 or 4 days, but it got there. It never came back to this point. It got there. So there you go. I hope that helps everybody. And call that a wrap. All right. Be safe. Take care.